Good day everyone, my name is Allynna Ibañez of BS Accountancy 2, and today I am going to report the continuation for the topic Accounting for Changing Prices and Reporting in Hyperinflationary Economies. So, let's start with constant peso accounting. Constant peso accounting is the restatement of conventional or historical financial statements in terms of the current purchasing power of the peso through the use of index number, also known as purchasing power or price level accounting. The traditional concept of preparing financial statements based on historical cost is known nominal peso accounting. The price index used in restating using constant peso accounting is the general price index, which means the overall changes in price of goods or services. The objective of constant peso accounting is to report elements of the financial statements in terms of pesos that have the same purchasing power. Accounts are classified into monetary or non-monetary. What items are restated? Remember that only non-monetary items are restated when preparing constant peso accounting. So the overall formula in restating using constant peso accounting is historical cost times the fraction of index number at the end of reporting period divided by the index number at acquisition date. Let's have an example. Mandaue Company was formed on January 1, 2014. Selected balances from historical cost statement of financial position on December 31 where land purchased on January 1, 2014, investment in long-term bond purchased on January 1, 2017, and long-term debt issued on January 1, 2014. The general price index was 120 on January 1, 2014, 150, and 300 on December 21, 2020. So, what amount should be reported in the hyperinflationary statement of financial position for land? So let's apply the formula, which is land at historical cost of 1,200,000 pesos times the index number at the end of reporting period, which is 2020 300, divided by the index number at acquisition date, which is on January 1, 2014, which is 120, is equal to 3 million pesos. So 3 million pesos should be reported in the hyperinflationary statement of financial position for land. Next question is, what amount should be reported in the hyperinflationary statement of financial position for investment in bonds? So now, let's classify if the investment in long-term bond is monetary or non-monetary. So, investment in long-term bond is a monetary. So, the rule is only non-monetary should be restated. So, it will remain 600,000 pesos. So, next question, what amount should be reported in the hyperinflationary statement of financial position for investment for long-term debt? So, let's classify if it is monetary or non-monetary. Long-term debt. Debt is a monetary account. So, general rule is not only non-monetary is restated. So, it will remain 800,000 pesos. Let's proceed to the next example. Escobar Company provided the following information on December 31, 2016. Cash, inventory, PPE, current liability, and so on. So, the question is, what is the amount of total assets for hyperinflation? So, let's begin in classifying the assets if it is monetary or non-monetary. Cash, inventory, and PPE. Cash is a monetary account. Inventory is non-monetary and PPE is non-monetary. So, the two accounts should be restated, inventory and the PPE. Cash will remain 175,000 pesos. So, in inventory, 1,350,000 times 300 divided by as the index number at acquisition date. So, index number at acquisition date is not given. So we're going to get the average index number, which is 2018 300 plus 240 of 2017 is equal to 270. So 1,350,000 times 300 divided 270 is 1,500,000. So let's proceed to the PPE. 450,000 times the index number at the reporting period, which is 300, divided by the index number at acquisition date, which is December 31, 2016. It is stated that PPE is purchased on 2016. So let's use the 150 index number. So 450,000 times 300 divided by the 150 is 900,000. So let's add total assets. So 175 plus 1,500,000 plus 900,000 is the total amount of assets for hyperinflation is 2,575,000. So what is the amount of total liabilities for hyperinflation? So the current liab and non-current liab. So the current liab is 350,000 pesos. So the non-current liabilities, it is stated that the non-current liabilities were loans raised on December 31, 2017. So loans is monetary. So the two accounts should not be restated. So it will remain 350,000 and 250,000. So let's add the two accounts. It is equal to 600,000 pesos. So the total amount of liabilities for hyperinflation is 600,000 pesos. So now let's proceed to the current cost accounting. Current cost accounting, it is the restatement of historical costs in terms of the current replacement cost. Current replacement cost is the estimated cost to acquire a similar asset at current purchasing price. So current cost accounting may also be called current value accounting. So the current replacement cost, so it is the estimated cost to acquire a similar asset at current purchase price. So the essence of current cost accounting. So it is the recognition of gain or loss in holding. So how do we compute the holding gain and the holding loss? So it is always the replacement cost is the basis. So if the replacement cost is greater than historical cost, so we have holding gain. So if the replacement cost is less than historical cost, we have holding loss. So the classification. The holding gain or holding loss may be classified as realized or unrealized. So if the asset is still unsold or unused, it is unrealized gain or loss. So and if the asset is already sold or used, we have realized gain or loss. So how do we compute on realized holding gain or loss? So realized is the difference between the current cost and historical cost of assets sold or used during the year. So for inventory is cost of sales at average current cost less the cost of sales at historical cost. So we have realized holding gain or loss. For depreciable property, depreciation based on average current cost less the depreciation based on historical cost. So we have realized holding gain or loss. For non-depreciable, so depreciation based on historical cost, we have realized holding gain. So for non-depreciable property, which is land, is current cost at the time of sale less the historical cost. So we have realized holding gain or loss. Let's proceed to the unrealized holding gain or loss. So it is the difference between the current cost and historical cost of the assets still on hand or unsold at the end of the year. For ending inventory is the current cost at the end of the year less historical cost, which is unrealized holding gain or loss. For depreciable property, net current cost or the current cost minus accumulated depreciation less carrying amount is we have unrealized holding gain or loss. for non-depreciable property, which is land, is current cost at the end of the year less historical cost. We have unrealized holding gain or loss. So let's have an example. Elijah Company provided the information for 2018. Inventory, historical cost 530,000, units 20,000, purchases 2,790,000 and units 90,000 is, and good available for sale 3,320,000, units 110,000. Inventory in December 31 is 1,260,000, units 40,000. Cost of goods sold 2,060,000 and units 70,000. The current cost per unit of inventory was 58 on January 1, 2018 and 72 on December 1, 2018. So let's discuss one by one. Number 1 question is, in the income statement for 2018 restated to current cost, what amount should be reported at cost of goods sold? As cost of goods sold. So, cost of goods sold is the average unit cost times the number of units sold during the period. So, 70,000 units times 65, which is the current cost per unit of inventory was 58 on January 1, 2018 plus 72 in December 31, 2018 is equal, divided by 2 is equal to 65. So 70,000 units times 65 is 4,550,000. Number 2, in the income statement for 2018 restated to current cost, what amount should be reported as realized holding gain? So, realized holding gain for inventory is the cost of goods sold at the current cost less the cost of goods sold of historical cost. So 4,550,000, which is computed in number 1, less the cost of goods sold 2,060,000 pesos is the realized holding gain, which is 2,490,000 pesos. So the current cost or the replacement cost is greater than the historical cost, so we have holding gain. Number 3, under current cost accounting, what amount should be reported as inventory on December 31, 2018? So in inventory, so we have the cost, number of units in ending inventory times the current cost, which is ending. 40,000 times 72 is equal to 2,880,000. And what amount should be reported as unrealized holding gain on December 31, 2018? Unrealized holding gain. So ending inventory at current cost is 2,880,000 less the ending inventory or the historical cost is 1,260,000 is equal to the unrealized holding gain is 1,620,000 pesos. So now let's proceed to the preparation of financial statement using current cost accounting. So sales are made at current selling prices throughout the price and therefore not restated. Cost of goods sold. So, this is where the formula. So cost of goods sold equals to current cost of the units at the same time of sale. So cost of goods sold is equal to the average units sold during the period, therefore not restated. So the average unit cost times the number of units sold during the period. So operating expenses. It is measured at current cost when incurred. These expenses are already stated on a current cost basis, therefore not restated. Depreciation. It is based on the average current cost of the property, plant, and equipment, therefore restated. Income tax. It is already on the current cost basis. However, the income tax is computed on the basis of the income under historical cost. Preparation of current cost statement of financial position. Cash and cash receivables. These items are already reported on the current basis in conventional statements and are therefore not restated. Inventory. Inventory is stated at current cost at the end of the reporting period. Property, plant, and equipment. Land is stated at current cost at the end of reporting period. Depreciable property, plant, and equipment are shown at current cost minus accumulated depreciation based on the current cost at the year end. Payables. Payables are conventionally reported on the current basis and therefore do not require restatement. Share capital and share premium. These items are not restated. Retained earnings. So, the balance of retained earnings is obtained from the current cost statement of retained earnings. So, it should not be restated, but the current cost retained earnings on January 1, add the current cost net income, total, and last the dividend declared or paid is equal to the current cost retained earnings on December 31. Retained earnings purpose is to balance the Past 29. Financial accounting in hyperinflationary economy does not establish an absolute rate at which hyperinflation deemed to arise. It is a matter of judgment which, when restatement of financial statements in accordance with past 29 becomes necessary. So, these are the characteristics which indicates the existence of hyperinflation. IAS 29.3. Number 1. The general population prefers to keep its wealth in non-monetary assets or in a relatively stable foreign currency. Number 2. The general population regards monetary amounts in terms of a relatively stable foreign currency. Number 3. Sales and purchases on credit takes place at prices that compensate for the expected loss of purchasing power during the credit period. 4. Interest rates, wages, and prices are linked to a price index. Number 5. The cumulative rate over 3 years is approaching or exceeds 100%. So, however, it concludes that it is a matter of judgment when restatement of financial statement becomes necessary.
In terms of
So, that's all. Thank you.